house, your home. Behind on payments, foreclosure, foreclosure, foreclosures. Foreclosure looking like it's the only option that you have. Well, maybe not. In America, loan modifications are becoming something that's in the forefront amongst banks everywhere. The reason for it's real simple, and this is why they're predicting 10 million of them in 2009 alone. What this short video is going to cover are some examples of loan modifications that can be done and are being done, a short explanation of why it's good for the bank and the homeowner, and a location called Loan Mods or Us, where you can view the 22 most frequently asked questions about loan modifications and get more information if you like. Example number 1, homeowner started with a 7.8 mortgage, ended up with a 6% mortgage. That sounds good. Mortgage payments went from $5,200 down to $4,100. That's $1,000 more than $1,000 a month, instant savings. Other thing on this is his original mortgage did not include any principal. This has an $800 per month principal reduction included in it. Also, and because of that, the mortgage is going to be paid off 3 years earlier. In addition to that, he was behind almost $9,000. That was completely forgiven. He's current. So bottom line is $1,800 per month is being either saved or building equity in his residence. Doing the math on that, $21,000, and if you add the $8,800 to it, that's almost $30,000 in savings, forgiveness of debt, or equity buildup in his residence. One of the questions we always get is, what about if I owe more than the home's currently worth? How about reducing the loan balance? Well, this one started off at $356, was dropped to $320. That saves $35,000. Mortgage payments went from $2,100 down to $1,200 and change. That's an $859 per month immediate savings. So debt reduction, saving $860 per month, and going from a negative amortization loan to a fixed rate mortgage for the entire length of the term. The reason that banks are doing this, big banks, little banks, all banks, not all banks, but most banks are looking at this, is because they recognize they are by far better off dealing with a homeowner than going through the foreclosure process. Foreclosing costs, actually the national average is over $50,000, and almost all of that is direct expense to the bank. In addition to that, a bank must put money into reserves to offset that home they've just taken back into inventory, and then many times they'll have to fix it up, spend money, resell it, spend money, pay commissions, spend money. So from a cash flow perspective, the bank is infinitely better off doing a loan modification than going through foreclosing. Another thing that some folks do not recognize is that when they have a non-performing asset, which is a foreclosed home, on their balance sheet, it reduces the amount of money that they can borrow from the Federal Reserve so they can then lend to you and me, which is how they make their money. Now, from a homeowner's perspective, the advantages, there are a bunch of them. First off, if you're dealing with a reputable organization, the evaluations, so that the company you hire, well, as an example with us, one of our law firms, will evaluate your circumstances free of charge. If they don't do that, by the way, that may be a red flag for you. Loan modifications do not affect your credit score. If you haven't made your mortgage, of course, that will affect it, but the actual loan modification doesn't. And the beautiful part about this, speaking of credit, is that in today's environment, you can actually get a better rate on a mortgage through a loan modification than if you had absolutely perfect credit. Stopping the stress. The kids don't have to be relocated, go to another school. You don't have to explain to your friends, folks at church, why you're leaving. Having a mortgage payment you can live with that you know is fixed and permanent. Now, One of the questions I get all the time is, can't I do this myself? The answer is absolutely you can. Same way you can do your own brain surgery and pull your own teeth if you want to. Now, many of you know I'm not a big advocate of attorneys. However, in this one particular case, I firmly believe that attorneys are absolutely essential in getting the loan modified and getting a great rate with the bank. Can the loan be reduced and can past due amounts be forgiven? I've already shown you in one of our examples that yes, you can. Some of the frequently asked questions that I have available for you to review at Loan Mods or Us is, what do you need to do to qualify? Well, with us it takes about 10 minutes and is absolutely free of charge. What is a loan modification? What about Obama's plan? What about Obama's plan? Is there any advantage to me, the homeowner? What's a hardship letter and why do you need one? Isn't this the same as debt consolidation? Why should you use an attorney? Well, those are all answered and more on Loan Mods or Us. My suggestion would be check it out. It's free to check out and decide whether loan modifications are right for you. Our company represents a network of 9 law firms. If they accept you as a client, and they accept about 30% of the ones we submit, they have a 97% success rate in being able to do a loan modification on behalf of you, the homeowner. No upfront fee to find out. If they approve you, and if they cannot do the loan mod for you, they give back your money. So there's nothing at all to risk here. 10 minutes of your time. Call me, email me. I will gladly answer any and all questions, and check out to see whether or not loan modifications are something that you should consider. You can always do it yourself, or you can have a network of one of 9 law firms doing it for you. Here's the information. Thank you for your time, and may God richly bless you and yours today.